Telstra ups the prices of its mobile phone plans, highlighting the challenge the Reserve Bank has in getting inflation lower. Australia takes on Chinese government-backed hackers, and X is losing ground to Facebook's Threads. Welcome to Fear and Greed, daily business news for people who make their own decisions. It is Wednesday, the 10th of July, 2024. I'm Michael Thompson, and good morning, Sean Aylmer.
Good morning, Michael.
Sean, the main story this morning, Telstra has upped the prices of its mobile phone plans, including its cheaper Boost brand, a move which sent the telco's share price higher yesterday.
Telstra has upped its mobile plans in line with inflation over the past couple of years, but this time around the increases are higher, with monthly postpaid plans rising from late next month. Prepaid plans will change on October 22. The telco said it needed to up prices to invest in technology and its network. Now, basic postpaid plans with 50 gigabytes of data will rise by about 5%. Premium plans will jump 4%. Prepaid plans, that's where the prices are really hooking in here. They'll rise 6 to 7%, while long-term plans are being priced much more aggressively, 9 to 12% increases. Telstra's competitors have put up prices this year. Vodafone lifted costs by between 6 to 9% earlier in the year. Optus raised some prices by 5 to 6% in May. Hence, all the major telco providers, at least, are upping prices. Investors liked the idea yesterday. Telstra's share price finished up 2.2%.
Yeah, I suppose on Telstra's share price, Sean, while customers might not like the higher prices, Telstra clearly seems keen to restore profit margins, something that I imagine shareholders would agree with.
Remember back in May, Telstra outlined 2,800 job cuts, or nearly 10% of its workforce. Now, the telco is looking to lower costs, but it still has to invest in technology, including its network, and that is very, very expensive. It's been hurting the telco's bottom line. Telstra's 1.3 million shareholders really haven't had a good time of it recently. Even after yesterday's jump in the share price, it's off 11% over the past 12 months. So the decision to not just cut costs, but to boost revenue alongside that cost cutting is one shareholders like to hear. There's also a bit of an economic insight here. We regularly talk about services inflation not coming down fast enough. Michael, this is a great example of a service where prices are running well above overall inflation. Look at Telstra, Optus and Vodafone. All the price hikes are higher than inflation. They're all services inflation. It's also not a bad test of competition in the market. If you don't like the fact that Telstra is increasing prices, change providers. I wonder whether that'll happen. It is pretty easy to do because you can port your number, of course. So there's a risk for Telstra that people will actually shift. But given that Vodafone and Optus have also upped prices, it's probably not a huge risk.
Now, Sean, today is, of course, Wednesday, which is newsletter day, Fear and Greed newsletter day. It comes out today, mid-morning, kind of 10:30, 11 o'clock?
10:30, 11, yeah.
Yeah, around there. I'm going to take a bit of a punt here and say that you may be sharing your views on Telstra.
Yeah, I think that's fair enough. I've got to say, because I pay for a bunch of the kids' phones and my own, what would I say? I'm a fickle user of mobile plans. I can say I have at least 4 mobile providers that I use. And when all this happened yesterday, it just made me stop and compare plans. I started getting quite angry. Anyway, at that point, I started writing.
Oh, fantastic. You let the anger flow into the pen, Sean, and onto the page or into the keyboard and onto the newsletter.
That's right.
In this particular case, head along to fearandgreed.com.au and put your email address in, sign up for the free weekly newsletter, because the show itself, this podcast, is all about the news. The newsletter is all about Sean's views, and it is great. Additional context, kind of a bit of opinion, great information. It's taken off in the last few weeks and we've been getting great feedback about it. So sign up today, get on board before it's too late. Sean, moving on, local markets, how did they perform yesterday?
The S&P ASX 200 closed up nearly 1% to 7,830 points, more than reversing Monday's tumble. The telco index was best on the day, thanks to that 2.2% jump in Telstra's share price. The financials also did well. Westpac and ANZ were both up more than 2%. Commonwealth and National Australia Bank rose around 1.5%. Other strong large cap performers include WiseTech Global, Aristocrat Leisure, REA Group, Santos and CSL. The underperformers include Macquarie Group, Goodman and Woodside Energy. Best on the day was Insignia. the wealth manager, formerly known as IOOF. It jumped 14% after a media report suggested investment bank Citi had been called in to look at merger activity. Insignia denied that, but its share price was still up 14%.
Goodness. Now, what about international markets?
On Wall Street, the broad-based S&P 500 set its 35th record close yesterday morning, while the tech-based Nasdaq Composite was also higher. Apple jumped at 0.7% to lift its market cap to $3.49 trillion US dollars. Microsoft slipped 0.3%, pushing it to the number 2 slot, worth $3.47 trillion US dollars. Nvidia rallied almost 2%. It's worth just a mere $3.15 trillion US dollars. Nothing like Apple or Microsoft, really.
It's a minnow.
It is, the poor cousin. In commodity markets, Brent oil's down below 86 US dollars a barrel, while gold continues its slow climb. It's fetching around 23.60 US dollars an ounce. The Aussie dollar has held onto the ground it made earlier in the week. It's trading around 67.5 US cents.
And on that subject, Sean, you have an interview coming up today. It's a great chat with NAB's head of FX strategy, Ray Attrell.
I sure do. We ask him all about what's happening to the Aussie dollar, not just where it's going, what he thinks will happen, and he thinks it will appreciate against the US dollar, but why. And we talk about the short-term issues, which is very much about interest rates and interest rate expectations. Also, the long-term issues that push the currency. And a lot of that is commodity prices. But he had some really interesting things to say about what's happened in the last couple of years, how the link between commodity prices and the Aussie dollar has shifted and why that's the case. It's a really interesting lesson about the currency and its impact on and kind of what impacts it and how it impacts other things.
Yeah, it is a good chat. It is a must listen today, Sean. It is coming up. A must listen. It is coming up after the show. Stick around for that one. We will be back in a moment with the rest of the day's business news. Sean, Australia, backed by allies, the US, UK, Japan, Canada, and New Zealand, has accused a Chinese state-backed cyber group called APT40 of repeatedly targeting government and private sector networks.
The naming and detailing of actions of the group APT40 by the Australian Signals Directorate is unprecedented. And of course, it comes just a month after China's premier visited Australia and as relations between the two countries improve. The statement was backed by the Five Eyes countries. They're the ones you mentioned, the US, UK, Japan, Canada, and New Zealand. Also on the statement were Germany, South Korea, and Japan. APT40 is backed by the Chinese government. It regularly targets organisations in various countries, and the intelligence alliance believes other countries are at risk of the same security threats. The group of nations said APT40 is actively conducting regular reconnaissance against networks of interest in Australia, looking for opportunities to compromise its targets. Now, the group uses compromised devices, including, it's not even big business necessarily, it might be a small office or a home office device. They then launch an attack that blends in with legitimate traffic and challenges network defenders. Pretty amazing, though, that we are being so vocal, we as in Australia are being so vocal against this state-backed cyber group.
Prime Minister Anthony Albanese said the 103 members of his caucus are all on exactly the same page about issues on the war in Gaza.
The conflict in the Middle East has been a treacherous issue to navigate for the Labor Party, as demonstrated by Senator Fatima Payman leaving the party last week to sit as an independent. Mr Albanese said the caucus allows a range of debates on all sorts of issues and common positions are worked through. He went on to say that the Labor Party's position of support for the state of Israel and support for a two-state solution with Palestinians being able to realise their legitimate aspirations for their own state, side by side with Israel, has been part of Labor's platform for a long period. He was speaking after appointing Gillian Siegel as the government's new special envoy to combat anti-Semitism. He also plans to name a new special envoy to combat Islamophobia in coming days.
Sean, the stage 3 tax cuts didn't give consumers much more confidence, with sentiment falling again this month, particularly among middle-income earners.
The Westpac Melbourne Institute Consumer Sentiment Survey for July shows people are stuck in a deeply pessimistic mood. Not helping is a big jump in rate rise expectations. In fact, 3 in 5, 60%, now expect higher rates. The survey shows family finances are under pressure, while the Stage 3 tax cuts, alongside other July 1 measures, have done little to boost the mood. Now, having said that, Westpac points out that many people wouldn't have received extra money in their pocket when the survey was done. There was some good news, though, Michael. Consumers are less pessimistic about the economic outlook.
Retailer Bapcor, which owns Autobarn, has rejected a $1.8 billion takeover offer from Bain Capital, saying the price didn't represent fair value.
The group also appointed a new CEO who is currently running 7-Eleven in Australia. In a statement, the board of Bapcor said it had considered the Bain proposal in the outlook for the company and decided the $5.40 a share offer was too low. After initially falling on the news, Bapcor's share price closed flat at $5.06. It doesn't necessarily mean the deal's off the table. Analysts thought the initial bid from Bain was fairly opportunistic. In fact, the bid was about, that $5.40 bid was about 24% below Bapcor's peak in September last year. It really fell hard, Bapcor, and the actual bid in the end was about 23% above where it had been trading when the bid was made a few weeks back. The point there is that the board obviously thinks it was undervalued at the lower price, so I reckon we're going to hear more about this one.
Sean, this next one's an interesting one. Exchange-traded funds, or ETFs, are attracting a big chunk of investor inflows, with the market now worth more than $200 billion.
First, I'd like to say all the stories are interesting, Michael, not just this one.
I didn't mean to kind of single this one out as being particularly interesting. I just
showing your bias towards investing here.
Oh, no, I certainly am not, and I didn't mean to do that. You know what, Sean?
What, Michael?
I'm not going to cast judgment on any stories now. I'm just going to introduce them without my own opinion.
Exchange.
You're like, at last.
Yeah. Australian ETF assets under management jumped 15% over the first 6 months of this year, following solid gains on global equity markets, also stronger investor flows. The $200 billion value of ETFs now compares to $178 billion at the start of the year, according to Vanguard. Australian ETF assets rose by around $25 billion from the start of January to the end of June. About 40% of that reflects new capital, while the rest is mostly about market returns. About half the inflows went into ASX-listed international equity ETFs, so people want to invest in international equities. They're using ASX-listed ETFs to do that. Another key theme over the last 6 months or so was the surge in listings of active ETF and managed fund products. Out of the 41 new ASX ETF listings in total, 68% were actively managed funds.
I know I said I wouldn't pass judgment on any stories, but this next one, Sean, I think is a good story. And
you have to, Michael.
It is one that is close to my heart because I worked on this show for some time with Ray Hadley. The Sydney Talkback King has won his 158th consecutive radio ratings. That is 20 years now on top. 20 years after he won his first victory. 2 decades as number one. That's pretty impressive.
What's he like to work with, Michael? Ray Hadley.
Great. The thing is, I worked on that show for 8 years, and I learned so much on that program because it's such an extraordinary environment to be in, where you can essentially go to air having done a whole lot of work. Prepared a whole lot of content, and we were all in there from about kind of 4:30, 5 o'clock in the morning, and Ray would come on air at 9, and Ray would be there at the same time as we were in the morning, and you would be working and reading and writing and organising things, and you would go on air at 9 o'clock, and everything could change in an instant, and all of a sudden it is following breaking news. Just a single call from a listener can change everything, and everything just shifts in an entirely new direction, and there is nobody better at that than Ray Hadley. And so I just learned so much about kind of programs, news content, and chasing a story right through to its completion. Yeah, I thought I really enjoyed it.
Because we spoke to Ray very, very early on in our show, like in the history of our show. He was very generous with his time, but it was a fascinating interview. And he basically talked about how hard he worked. And as you said, it's not, I mean, you guys were up working really hard, but he was there as well.
Yeah.
Anyway, Ray, for those who don't know, he hosts the morning program on 9-owned 2GB. His unbeaten stretch over 2 decades is unprecedented for any key time slot on Sydney radio. Hadley lifted his audience share by 1.1 percentage points in the latest survey, taking his audience share to 16.4%. His stablemate Ben Fordham on 2GB, who hosts the breakfast program, also maintained his number one position in his time slot with a 17% audience share. Now, the number two in that time slot is Kiss FM's Kyle Sandilands and Jackie O. They're an interesting FM duo, controversial. In Sydney, they slipped 0.6 percentage points down to 14.1%. But this survey was the second partial ratings period of the duo's entry into the Melbourne market. They were paid a mozza to do both Sydney and Melbourne, which they haven't, which no previous performers have been able to do. So far, they've failed to make a real impact in Melbourne. They recorded a 5.9% audience share, very, very early days though. 3AW's breakfast program in Melbourne, hosted by Ross Stevenson and Russell Hawcroft, remains well ahead in the time slot. It's got a massive 18.8% share.
Sean, turning to international news now, and US President Joe Biden yesterday launched an aggressive effort to hold on to his party's presidential nomination, issuing a letter to wavering congressional Democrats and appearing on national TV to insist he isn't going anywhere.
The pressure is on. His multi-pronged counter-offensive was part of a coordinated effort by the president's team to stem the growing push for him to step aside. In a letter to congressional Democrats, Biden wrote that more than 14 million voters had chosen him as a nominee, and that any weakening of resolve or lack of clarity about the task ahead only helps Trump and hurts us. Biden then called into MSNBC, which is watched by many Democrats, and insisted he's staying in the race. Then later he told donors that, "I'm in it to the end, I'm going to beat Trump." That's all well and good. Then there was a New York Times report about his health. Basically, the report said that 8 times in 8 months, a Parkinson's disease expert had visited the White House. Now, a spokesperson for the White House refused to give any detail. They didn't quite refute that report. The spokesperson did say the president had undergone 3 neurological tests since entering office during his annual physical exams. But that's a story that won't go away.
Finally, Sean, I mentioned this one at the top of the show. X has been hit by very slow user growth as the social media platform's owner, Elon Musk, divides audiences and it faces new competition, a lot of new competition from the rise of Meta's rival platform Threads.
X said its number of global daily active users in the second quarter of this year was 251 million, a rise of 1.6% from the same period a year ago. According to the Financial Times, this contrasts with the double-digit growth experienced in the years leading up to the acquisition of X by Musk. Now, Mr. Musk has been a very divisive leader of X. He rebranded it from Twitter to X. The group has shed advertisers. He decided to remove most of the platform's content moderators. He said they were too expensive. Across the way at Meta, of course, which owns Facebook, it's launched Threads. It launched Threads about a year ago in an effort to challenge X. It's grown to 175 million monthly active users compared to 600 million monthly active users claimed by X, obviously a lot more on X. But the growth rate of Threads is huge compared to X.
All right, up next, Sean, is the Fear and Greed Daily Interview. You're speaking today with Ray Attrell from NAB.
Yep, all about the Australian dollar. What will it do? Will it increase? Will it appreciate against the US dollar? And why? Ray's the man to answer that.
Yeah, it is a good one. It's up next in the Fear and Greed playlist on your podcast platform or at fearandgreed.com.au, which is where you sign up for the newsletter, which is coming out mid-morning this morning. So there is just enough time to get your email address on the list so that you'll get that when it's released. Sean, of course, it's also Wednesday today, which means...
Yeah, how do they afford that about this morning?
Well, how do they afford that is a very topical one today. And this is, of course, our sister podcast that I host with Canna Campbell, financial planner and the founder of Sugar Mama TV. And we are talking today about tax cuts, basically how to use your tax cut to set yourself up financially for the future, and going through a bunch of the different options. And we're talking to the team from UniSuper about this, and they include kind of salary sacrificing into your super, paying off debt, saving the money, investing outside of super, kind of assessing all of the various options. It is a good one. It is a short, sharp episode today, well worth checking out. I'll put a link in today's show notes as well. Thank you, Sean.
Thank you, Michael.
It is Wednesday, the 10th of July, 2024. Make sure you're following the podcast and please join us online on LinkedIn, Instagram, X, TikTok and Facebook. I'm Michael Thompson and that was Fear and Greed. Have a great day.